So greetings and welcome once again. Let us get into the conversation in relation to our investment portfolio. Let us enter our password, and now we're logged into our account. So this is what it looks like on the big screen, and as is customary, if you want to see what it is like on the big screen, then please feel free to watch our horizontal content. But if you want to see what it looks like on our vertical screen, please continue to enjoy the vertical view in our shorts section. All right. So as you can see right now, this is our position and all of them are red. I must let you know that this week we were up about $15,000. Yes, we were up to about $15,000. But with that rug pull that took place, it pulled us all the way down to about $9,000 in the Webull portfolio. So I'm just going to give you some insights into what has taken place. And during the volatility that the market has experienced, we did a few things. We sold some BMNR to get that capital freed up so that we can deploy it into some of the fallen stocks which we know are positioned for a good comeback. All right, so that is just something that I want to bring your attention to. We are going to, in a little while, go on the screen and see exactly what is happening. But before we get there, let us enter our account and look at the current value of our account. So when we're looking at the totality of our account, we're seeing a total figure of $9,728.15. I know that this is a fall from what it was before, but that is not a hindrance to us. All right, and we have divided our accounts into two sections. One is for the Roth and the other is for the individual. From the individual, we had taken some capital, about 6,000, and placed it into the Roth account. So if we had 6,000 into this account and it's now at $4,973.57, it means that this account is down almost $2,000. All right, so let us go into the Roth account and see what it is saying that we're down. We're down $1,073 on SoFi, and that is okay. We're comfortable with being down at this juncture. Our first position that we need to execute is in December, and we're going to be out of this position by November, right after the earnings report has been indicated. Within 2 weeks we will be out of this position. So that is a play that we have planned for this position of $35 and $37 strike price, right? I want you to know that we see SoFi valuing at our bear case to be $35, as we have been pounding the table, pounding. So if SoFi falls to 25, then that is a buy, so you can ride it up to the 35. So the market has fallen. This should not be a situation where you're panicking and you're selling. Right now is a time when you will double down, because this will only be short-lived. Within 6 months, you'll forget about this blip in moment. All right, so 6 months time from now, you'll be looking at things from a different perspective. So another thing that I want you to know is that in our main account, let's go into our main account, which is our individual account, the account from which we're going to trade in, get capital, and then deploy it into the Roth account. We're currently at $4,717.14. Our SoFi position is relatively up, and these are for 2026 and 2027. our 2026 January position, we're going to get out of that in November or December to free up that capital so we can deploy it in our 2028 position. All right. But we're going to be holding the SoFi calls for January 2027 at $35. So that is 5 calls, that's 500 shares of this company. And that there at 35 is a reasonable price because we expect it to be at 35 by 2026. All right. And we're expecting to be at 45 by 2027. By 2028, we're expecting to be at a bear case of $75. And these are just our bear case projection. We're comfortable with the market falling because we already have our predetermined positions that we have elected to move forward in these positions on. All right. So look at that and be mindful that you select positions which you are comfortable with. Now let us look at our overall portfolio performance and see what has happened. Let us go into our calendar and see what's happening. So in our Roth account, we're down 17%, but in our main account, we're up 237%. All right. And this is how the accounts are currently divided. IRA has 51% of the money. The cash account has 48% of the money. All right. And we understand why. Don't worry about the number that we have here currently. By the end of the year, we should be doubling this account. All right. So look at this number right now. And by the end of the year, this account will be doubled. So 2 9s, 18. We're looking for at least $20,000 to $30,000 to be in this account by the end of the year. All right. So let us see. Let's get into our individual account. Let us go into our option chain for SoFi. So let us see if we can go into the market, and we're going to type in SoFi. So now we're going to look at SoFi. Let us take a introspection and see what SoFi has to offer. SOFI. And as you know, we're only going to be trading options. And when we're trading options, we want you to be mindful that you only pick stocks that you are comfortable being assigned those shares, and you only pick companies which you are comfortable holding for the long term. All right. And the best place for options are leaps, mostly, unless you have some information that others have not yet gotten that you can use in this moment to maximize your earning potential. And majority of the persons in the market don't have the predetermined information. So what we have to do is to look for an indication of a dip so that we can make our entry. And if you look at the graph that we have, now to see this clearly, we're going to go on the 1 day time graph. You can see something very dramatic taking place on the 10th of on the 10th month, in the 10th month, on the 10th day, we see something very interesting taking place. And this is where the volatility occurred. We had SoFi making its way up to $30, and it was yanked all the way down to approximately $25. $8 and some change. What this is telling us is that this stock can move in this range, and if it moves in this range and it's here right now, it is going to try to meet or break this resistance once again. We are seeing this indecisive candle. This here is an indication that it's okay to enter. The entry point for this, if you're going to go into the stock, is right here. 26.99 is the worst case entry that you should care to take. All right, let us go a little closer, and right here is a good entry. Right, where's the blue? 26.61. That's a good entry. So at this price, that would be a good position so that you can ride it up to the resistance one, and if you are not comfortable, you get off. Remember, we told you it had a resistance at 29.91. We indicated that before. So when it goes up to that, it's going to try to break, but if it doesn't break, then it's going to fall back down. So if you remember this and you plot your graph like this, then you can appreciate what is taking place. So this here is an indecisive candle which showed that it was time to buy, and we did buy. This here is another indecisive candle. It is saying that the market could head further down. It could go down a little further. So I would just watch it for another confirmation to tell us the direction. It may go down for 2 more days, and then it spikes back up. Remember, earning is just around the corner, and we're expecting to have a blowout earning. This is the date when earning is going to be. That's the 28th of the 10th, which is about 2 weeks time. All right, so in 2 weeks time, we're expecting it to reach up to at least, at max rather, here, the resistance 3. So we're expecting to break resistance 1, break resistance 2, and move up to resistance 3. So over the next couple of weeks, we are expecting that this stock will move up. All right, so don't be fooled by the volatility that you're experiencing. If you're a short-term trader, then this will not be helpful for you. You should be on the 1 minute, 5 minute, 30 minute, and 1 hour time frame. All right, those are the time frame that you will be working on. We don't work on the 1 minute, 5 minute, and 30 minutes time frame because of how we operate. We operate based on a daily move, a weekly move, or a monthly move, because there are some plays that we only enter into during the earnings period. We only play earnings on some companies. Other companies we only enter when we have a big dip. So you have to determine where is your best and your most ideal entry for you to get the best results. Because if you are investing, you want to see a return on that investment. All right, now, so that is just something that I want you to bear in mind. Now let us look at the options chain to see if there are any places that we can get some good bargains. I would not go to the 17th of October, which is next week. I would go out to, my earliest play would be November 14th. That would be my earliest play if I'm going to play this game. And the position that I would want to be in is to go to the 27 strike price. That is the position that I would want to be in, and I would purchase right here for the weeklies. This is after earnings. After earnings, it should move, right? It should move up or it should move down. We're expecting to move up. So this would be a position that I would consider to enter in on a short-term basis. All right, so that there is one. The next position that I would consider would be, some of my favorite positions are in the 20 2026. So this here is going to allow us to enjoy the melt up that is going to be taking place. And I'll go to the $30 strike price. We say it's going to go to 35. Yes, we know that, but if you want to be really safe, you can go to the $30 strike price. If you want to just play it frisky, because any game can play, you can go right here, all right, and go to the 35 for January, and you should be out of this by November, December. After the melt up, you get out of this play, all right, and then you roll over into another play. Now, another area, let's go into that option chain. So the one that we had mentioned was for November 14th, and the price was $30. No, it was $27 for November 14th, because we see surpassing 27. So this here is saying that 27, 28, 29, we think it's going to be at least $30, right? So that would be a good entry. 27. And the next play we're thinking of is January. And the play that you should consider to get into is at least at $30 at $2.50. And worst case, you get into the $35 at $100. So that there is a play that we could get into, all right? So the next play that I would want you to consider, one of my favorite plays, my top play that I want you to really, really consider, is to get into the $40 strike 2028 and try to get this at $500. That's the price that I really want you to get this at. So January 2028, the $40 strike, try to get this at $500. If you cannot get it at $500 and you see the market deflates even further, try to get it at about $650. $650 is a good price to get it at. That is, it's a good price, but it's not the greatest price, all right? So $650 would be a good price to enter it on, all right? So based on the movement so far, an ideal price for this would be $7.27. But we don't want that price. We want a better price. So if this market falls and it breaks the band and it goes down, get your cash ready, because we're going to be going on a buying spree. So once it if it reaches 500, you know that you have to get as much as you can get, all right? So that is how I want you to play it. So get at least $50,000 available. If you don't have 50,000, get at least $500 available. If you don't have $500 available, or you want to put more, you can get $5,000 available, all right? And then you're going to put it in this, you're going to let it sit, and while it is sitting and incubating, you're going to try to accumulate some more funds, all right? So this here is a nice play to get into. I wouldn't go into the $42 just yet. Only when the $50 come out, then I'll consider to enter. And I think that they are doing us an injustice by not putting out the full spread up to $50 at least, because we can position ourselves now for that which is possible to come, all right? So the market makers are holding us somewhat at ransom, but let us not be wary about that situation, because remember, we said that by 2028 we're expecting SoFi to be about $75. So at 40 all the way to 75, that is almost a double. So don't be perturbed by the gradual progression. When you hold out to what you have, you'll realize that this will be beneficial in the long run, all right? Another stock that I want you to have on your radar is APLD. Let us go into APLD. I made mention of it to you. It is currently sitting at $33.99. That was the price before the market closed, but after market close it was $32.67. What I want you to understand is that we had indicated a price target. I told you that this was a $30+ stock, and it has hit our price target. It actually hit our price target because this went all the way to $39. Yes, you heard that right. It went from 27 to 39, and we just spoke about that this is a $30 stock. I can tell you that we have done an assessment. We only specialize in a few companies, but we are expert in those companies that we specialize in. We cannot tell you the exact time when they will reach, or the market will understand the valuation that is fair for them, but you have to just put yourself in a position where you can be a beneficiary of those changes. All right, so that is just something that I want you to understand. If you remember how Palantir did its run, the same run is going to be taking place with this company as well. It may not be as aggressive, but this company is going to go even higher. So this has already hit my bear case 2025 price target of $35. All right, so this has already hit our target. That was 1 week ago that I made mention of it publicly, and today is the 14th day, and we're seeing it, that it has surpassed it and was all the way up to $40, which it was getting ready to get to our bear case of $45 in 2026. All right, so you just have to have the vision of the understanding and see where these companies move. So BBAI is another company that I want you to keep your eye on. This company, it may seem speculative because it's a low value company in terms of the amount to enter. The barrier of entry is a bit low. This stock will get a lot of fluctuation in their prices, so there is going to be some level of what we call manipulation, right? But don't worry about that too much. Just observe what is taking place in this market and position yourself accordingly. So we see this reaching at least $15, not in 2025. That's not our 2025 bear case, but we see it reaching $15. So I would suggest to you, if it is possible, get it, buy it for $10 right here in 2028 and just sit and hold on to it. Just put 10 contracts, $300, no foul, right? And enjoy the ride as it progresses up. All right, so that there is one. Let me get it up on the screen. So let's just go into BBAI. Let's see if we can put it up on the, get into the option chain, and I'm going to show you exactly one that you should consider. So this one at 350, get this at 350. 350, you buy 10 contracts, go till cancel, and then you click buy. All right, so that's all you need to do, and it's going to cost you $3,500. Remember to change this to 350. That's a fair price for it, 350. If you can get it for 300, that would be ideal, because all you would need to do is to reach to $13, and then you'd be in profit at break even. All right, then buy at least 10 contracts. If you can't buy 10, buy 5. If you can't buy 5, buy 2. If you can't buy 2, you can try to buy 1 to keep it on your radar. All right, but usually we buy at least 100 contracts in our other accounts and 1,000 in our bigger accounts. That way we can see real move and real progress. All right, and you'll really understand how you can multiply in quick succession. So just put maybe 10, 100 if you want. If you have 38,000 sitting around, you can put that in. 35,000, put that in, and that would be a good position for you to enter in. And this just move in a little bit and you would be in profit. If you have 35,000, you can just let it sit for 2 years and you don't need that money, then this is a play that I would suggest that you could consider as a speculative. This 100 contracts can turn into $1 million. So you can turn your 35,000 into $1 million if BBAI does what it should do. And I'm expecting to start to pick up steam by 2027. So by 2027, you should already know if this is progressing as how you desire for it to progress. So don't worry about it. Pick up a few and then let it play. All right? So that there is something that you can consider to invest in. There are many different stocks, many different companies in the market that you can look at. All right. So Rich Tech AI, let me go on it so that you can visualize it. It's RR. This one is super speculative. It is at $5.92 now, but we actually want an entry at about $4.14. That is an ideal entry to get into. All right. So at its current price, it may break further down. When it reaches here, this is time when you start eyeing it. If it doesn't reach, if it stays in this resistance band, then you just have to take it here. If you're going to trade it, if you're going to hold it long term, then this won't matter. If you're going to trade it, then you're going to have to know and understand how the charts operate. So you have to decide what it is that you want to do, if you want to hold it for the future or if you just want to speculate on the display. This is very speculative as far as I am concerned at this juncture. It's not yet as profitable as some of our other plays. So if you see a future in this company, then you can move out to 2028, but these are too expensive for my taste. So I just go and buy the actual shares of this company at $4 a piece. I'd rather to buy the shares of this company than to buy the options for this company. Am I right? That's just my positioning on this company at this juncture. After it stabilizes, when it reaches $4, $4.40, $4.50, then is when I will try to buy. So I needed to break this resistance line and come down in this range before I am truly interested in purchasing this company. All right. So you see how this company has moved right here from $1 all the way to $5. So all these persons who were in here in the initial stages, they are basically in profit. So most persons are looking to exit, to have a sale. All right. So you just have to be mindful and understand how this company is working. All right. So let's just look at the option chain. These are too expensive. I wouldn't want to enter those. I wouldn't want the weeklies either. I would want something like a leap. Let's look at 2020. That's still too expensive for my taste. No. So I would suggest buy the stock, leave the options out for now, or you can buy the stock and sell options on it when it starts to move upwards. All right. Or let's see what you could do you could actually sell because we know what price we want it at. We can actually sell some options. So we're going to sell some puts. So if it falls to $4.40, we're going to try to be buyers. So we can sell some puts at those prices, all right? But if it comes to $3, we're going to sell some puts at those prices, which is something that you can consider. Selling would be better than buying at this juncture in terms of options. So that is just how you have to reason and rationalize and analyze the different companies to see what is making the best sense for you as an individual. All right. So let us look at our speculative plays. Rich Check is down, Sound is down, Open is down, Resolve AI is down. Let's look at Resolve AI. That is R. Let's try to pull that up. R Z L V. All right, so Resolve AI is at 513. I would wait for it. It's at the price that if you were not in, you could have gotten in, but I would wait for it to come to this support line of $2.92 before I am interested in this company. All right. Yes, that's all I would say. So this here, it can set up to go up further, but you have to know the risk that you're willing to take with this company. And because it's speculative, you want to get it at the lowest possible price so that there is something for you to consider. So these are just some ideas as to what you can expect from these companies. And let's look at the option train to see if buying the options would make sense. It's at $5. You want $3, 5, 6, 7, 8. These options are okay, but they are not the best. For 2028, they're gonna make 50% on that. That's 5. Bam, bam, bam. I would let this fall a little bit more before I consider to buy any options on it. All right. So wait until it reaches this price. But if you are impatient and you can't wait, or you think that the market is going to continue up, then you can do whatever is in your best interest. Remember, you are the CEO of your portfolio. So those are just some ideas that I want you to bear in mind as you continue on this investment journey. And though our account was in at a reduced balance compared to the last time, that is not a hindrance for us to progress to make $1 million within 5 years. We're not even at year 1, right? So let us look at the Moomooo quickly. So in our Moomooo accounts, even though the market was down, we're still making money, and we're still up 400% on one play, 90% on another play, 76% on another play, 123% on another play, and we are down 33% on one play. That's okay. We're going to recover in a little while, so don't worry about that. Right after the earnings, we're going to be selling this position, and then we're going to be rolling that over. All right. So thank you for spending some quality time with us, and I hope that this information was edifying and insightful. And I pray that you will make a strategic positioning as you continue on your investment journey. Until we meet again, this is our update for the week that was. Be blessed.